On Friday, June 10th, we have one of the main indicators for the markets right now, one of the most relevant. It comes to the CPI data, the Consumer Price Index. This is going to be, I don't want to use the term make or break event for the markets, but it's kind of like a make or break. Why? Because if you look at the price action today and for the last couple of days, the story is the exact same one. All eyes on inflation. I mean, the market today opened up really, really high, but we end up being flat. We end up being flat. Why? Because the rates, the setup in the interest rate when it comes to the yield of the 10-year bond, the 10-year treasury bonds, reaching and breaching 3%. Not good, because it spooks investors. It spooks them. Why? Because it means maybe the market is already pricing in the fact that inflation is going to continue to remain high. All right. So this is just an indication, just based on today. But we still have 4 days to go. Actually, three days to go, because the CPI data is going to be released in June 10, I believe, pre-market, if I'm not mistaken, around 7:30. Usually it's been published around 7:30 or maybe 9:30. Nonetheless, it's going to change, or it's going to have or bring a lot of volatility, like we've seen. It's going to bring a lot of volatility in the market prior to that day, or after that day. So we want to be ready, because it's going to create a lot of potentially, depending on whether inflation. So let me backtrack. It's going to have two scenarios, right? Always two scenarios. Like, there are two faces of every coin. Two scenarios. Number one, inflation continue to tick down. Inflation continue to show signs of prices going down. That means good news. It means prices are going down. So the Federal Reserve will not have to break the economy, will not have to break the entire market, because they're going to be aggressive. So it means maybe a pause in interest rate hikes. That means strong relief for the markets, and money can start flowing back into stocks, and we start going back to the bull run. All right. So that's scenario number one. Scenario number two, CPI comes and remains very high, and instead of going back, it's even worse, going back up a lot more higher than the expectations, which I believe is around 8 point something percent, and 8% and some change. So if that's the case, that is the worst case scenario happening, and the market will puke on that. The market can puke on that. It's not guaranteed, but the market will likely puke on that, because it means, the Federal Reserve has now all the reasons to be as aggressive as they want to be. And that means market is going to pull back. So if market pulls back, maybe all of the gains we've seen now are going to evaporate. But as an investor, you want to remain focused. You want to remain calm, because it's going to create a lot of fear. It's going to create a lot of panic. But if you know why you invest, if you have your strategy set up, it shouldn't change that. And what is that strategy? It's a strategy in order to build wealth, in order to have generational wealth starting now, because the market ultimately always goes up. We talked about it many times now. All right. But as an investor, you want to focus on the long term. And by long term, I don't necessarily mean 10 years. I mean just a couple of years from now, or even a couple of months from now, when everything started smoothing down, because inflation is not going to remain high indefinitely. No, at some point, it's going to peak. It's going to slow down. And when it starts slowing down, and until it does slow down, the market will still remain very choppy, volatile, and bipolar. All right. But these are the times you want to be invested in the companies that are going to be strong and provide you with good earnings, good dividend, good passive income, and also help you rebound. Help you build that generational wealth, when everything start rebounding. All right. So keep buying and holding quality stocks. How to define a quality stock? It's a stock of a company that, despite recession, inflation, deflation, whatever, they are going to produce good earnings. Or companies that are going to still be around for the next 5 to 10 years and still be strong. a company like Apple, a company like Microsoft, a company like Google, a company like Amazon. Energy companies are those kind of safe haven right now when we have high inflation, because as oil is still remaining high, they are producing huge cash flow money, which can turn into high dividends. So you are growing your capital, but also having a good, healthy, juicy passive income in the forms of a dividend. All right. But also companies that are being beaten down and are set to recover, like the airlines, for example. All right. And we have a bunch of others, but just think of any quality stock, any company there that has strong footings in this market and that are set to rebound and are not struggling with heavy debt, etc., etc. So you want to hold on to those companies and even your favorite cryptocurrencies. Personally, I'm invested into so many companies and so many crypto out there because the world is changing. All right. But now that everything is kind of, at discount, this is the moment you want to be buying. So if after Friday the CPI comes bad and we have a worst case scenario, you want to still make sure that you have your savings, your discretionary investing capital that you're going to put at work, because that is ultimately how you are going to set yourself for financial freedom, and your future self will thank you for the decisions you made now. That's the bottom line for us as an investor in this market, despite what's going to happen. Now, if the good case scenario happens, then you will continue to make a lot of, your gains and your profits will continue to grow based on when you bought. If you did buy, when the market started going down at the lows of May. All right. So that is the bottom line here, folks. And that's why I think this is still going to remain at the center, highlights of the stock market behavior until things change. That's why it doesn't matter which type of stocks you hold, pay attention to this.